for Nifty. While I'm now joined by Devang Mehta, who's the Director of Equity Advisory, Spark Private Wealth. Thank you very much, Devang, for joining us this evening.
Thanks, Sumita, for having me on the show.
Right, Devang, so I want to get your perspective on the fact that just some days back, we were speaking of the possibility of markets touching an all-time high of 20,000 points. There's cheer around earnings of some heavyweights as well, but 2 straight weeks of a dip. Have the markets really hit a pause button?
Again, as I said, Sumita, always after such a ferocious rally that we had in the last couple of months, I think there should not be many reasons to complain. And in fact, when such consolidation or correction happens after such a furious rally, it is actually a blessing in disguise, and the health of the market sort of improves after such a bit of minor correction. And why I say that, because if money making becomes extremely easy, then it's probably market sort of peaks out during such times. But right now, as you know, we are in an orbit of our own. Our economic growth is second to none. Surely, but definitely we have seen that our inflation as well as monetary measures which the RBI has taken, that also augur extremely well for our country. We are onto a rapid growth path, be it earnings, be it GDP growth, be it tax collection. All the macro factors are falling in place. The monsoon is getting almost near normal. I think micros, the earnings of the companies and the commentaries have generally been good. So my sense is, yes, this correction itself right now presents people with an opportunity. It's sort of, as I said, a lot of people would have missed the bus. A lot of people have money parked on the sidelines. So I think that's no reason to complain as such. There can be some correction, some bit of correction more. But mostly, as I said, it's more a buy on dip type of a market where it would be taken with both hands, as FII as well as DII. Both the flows generally remain positive and constructive over the next 6 months, 1 year period.
So FIIs will remain constructive, but would you say that it's time to perhaps dial down on equities and go back to what the Indian investor, retail investor has usually preferred: cash, FT, FNO?
I think no. My sense here is that equities, again, we are probably getting into a sort of a multi-year good compounding type of returns. And why I say that, again, the 3 factors which are very important, and I always call them 3 C's: credit growth, capex, as well as consumption. All are quite decent. Credit growth, again, is at mid-teens, 15, 16% of credit growth. Capex, again, to just cite an example, railway capex was 3 years back roughly around 50,000 crore, and today it's around, say, 1,50,000 to 1,80,000 crores. So I think the numbers, if I put in place, a lot of these numbers have been extremely encouraging. So the sense one gets here is that most of the things are falling in place, be it consumption, be it capex, be it credit growth, be it financialization wave, be it formalization, fiscal expenditure by the government. So I think there's nothing much to worry. As I said, yes, corrections and abs will always be parts of such bull run. One should actually not be concerned. Just go back to the drawing table, look back at your portfolios, and again buy companies which are great, companies which are good, and exit companies which are sort of gruesome.
Right, but then there's also the upcoming elections. So what impact do you think that will have on the Indian markets?
I think the short term, there would be a lot of overhangs on the market, be it geopolitical tensions, be it crude prices in the short term, as you rightly said about the elections, the general elections of 2024 as well. Normally, if there is an election heavy year, be it state election or be it general election particularly, I think it's a year where even government spending improves. We are seeing a lot of spend happening on infrastructure, road creation, highways, and also the silver lining this time is that even private capex is coming back. So my sense is that public capex plus private capex, in fact, has the power to fuel the economy to new levels. There was earlier pent-up demand after COVID. There is sort of structural demand in Indian economy as the demographics suggest. We are an aspirational population. Probably premiumization is also happening. So the sense one gets here is that one should stay put. Either, as I said, earnings, if in Indian earnings grow at say 13-14% very conservatively for the next 2-3 years, markets can probably give you returns in line with that. And if you're bottom-up stock picker, probably there are a lot of opportunities even in the large, mid, and small cap, all the 3 spaces.
All right, Devang, thank you very much for that comprehensive perspective and outlook. So Devang over there saying that the Indian investors should stay put into Indian equities. Moving